Good day, everyone. Well, we're seeing the markets bounce on the Fed statement. We saw the markets take about a 5% dive over the last couple weeks, and that's due to the news out of China, and then also the plummeting price in oil, which then had a bleed-over effect to the Russian market, where the plummeting oil prices created quite a few issues there. Now, right as we look, oil is attempting to bounce, but the overall downtrend in oil is still very, very alive and well. So if oil, which is about, what, 55, 56, if that were to go all the way down to 40, in other words, with this downtrend intact, that could be create further instability for the markets. But nevertheless, what we're seeing right now is the markets are attempting a bounce, and that's on a very strong Fed statement that was very market friendly. We are at the moment on a buy signal. Of course, that could change if the markets start to roll over again. And if they start rolling over again, it's probably because oil continues to fall. OPEC has said they will let oil fall all the way down to $40 a barrel, which is quite a large drop from where it is right now at 56. So that would probably be unsettling to markets. So we'll have to see how things play out in the coming days. If you look at the USO, that is the United States Oil Fund, and that's an interesting chart because you can see that it almost looks like a waterfall effect from several weeks ago when it just started to plummet, and along with the price of oil. So we'll have to see how that plays out, and in the meantime, if oil should get some sort of stability here, the markets will probably go sideways and then go higher into the end of the year. This seasonally is a comfortable time for markets, especially with central banks around the world printing money and the Fed being QE friendly, interest rate friendly, and so forth. So we should see markets stabilize from here on, provided that oil can find some sort of footing itself. As far as commodities and oil, commodities have also taken a nosedive, and the concern is that the world global economy is not doing as it should, and there's less demand on oil, less demand on commodities. The Chinese economy is showing further weakness. Therefore, there is concern that all this money printing is not having its intended effect. But nevertheless, the saying "don't fight the Fed" remains alive and well. If the Fed wants to continue to be very interest rate friendly and continue to print money in some form or another, that money has to find a home. And since 2009, part of that home has been in stocks, and thus this bull market that began in early 2009 is continuing right along. Bill Gross of PIMCO has said that don't expect the Fed to raise rates anytime soon. He doesn't think they're going to be able to raise rates in 2015. He's thinking it's going to be pushed over to the next year, following year. And if that is the case, then we could see maybe perhaps another year of this bull market that is growing long in the tooth. But we'll just have to wait and see. Gil?
Yeah, I think the news about oil is... I think the news regarding oil is old news at this point. When you look at this pattern, a lot of people will look at something like this and start to salivate and want to get short oil, That's usually the visceral reaction, sort of the primal reaction that a lot of people have once they see this kind of carnage. It's like they feel like if they can find a way to get on it now, somehow they will accumulate all this prior downside, and we've been short stocks for a while. And you look at, say, something like silica undercutting this low, this base. I think that's pretty well played out. Remember, we're shorting this thing around here. We talked about it in the webinar several times up in this area, even up in here, I believe. And how this was sort of a reverse cup and handle. You had a pullback in the handle, holds along the 20-day on the upside, and then breaks out to new lows. You could even shorted this thing on the gap down here through the neckline, which I consider to be the lows along here, because you can't really, if this is the left shoulder and this is a head, and this is a right, you can't really draw one of these descending necklines. It's a little funky, so I'll just use the lows here as my neckline. And on that gap down, you could have made a lot of money. I made a fair amount on that, and Tesla's another one. You know, we're shorting it up in here, right around the 250 level. You come all the way down and you undercut this low here, which is this is what I call a minor low, 199.25, and you start to rally. Now you're up into the 20-day. Maybe this is a short sale point, but I think this thing may noodle around, and if the market continues higher into year-end, don't be surprised if it just continues pushing higher above the 20-day a little bit, maybe getting to the 200-day. That wouldn't surprise me. But it seems to me, based on what I'm seeing among, say, short sale targets, like Splunk comes down, undercuts these two lows here, and gets into the lows of this base on this side here, and find some support. Now it's rallying back up to the 50-day. But again, if you're shorting this one up in here, and I think that's where we first started talking about it, you know, you're down a good 20% roughly from, I know I had more than 20% profit in this thing, and I think more like close, almost 25 or so if I recall correctly. But you know, you just get a sense, I get a sense of how much the market's given me on the downside, and at some point it gets a little bit overdone. And usually this sort of thing coincides with the market looking very ugly, which it did on Tuesday. So the classic QE market ugly duckling bottom is what we had. And everything looked terrible, and everybody wants to get short everything, and people are emailing me wondering whether, you know, there's alternative entry points for Tesla down here at 200, and you know, it's like, where the hell were you up here? You know, if you weren't anticipating the short side and then capitalizing on it on the downside, you're late to the party. You know, I think even someone in the chat room, and I was in the chat room on Tuesday, and I made the statement that I felt that the heart of the watermelon was out on the short side. And if you're still beating on the short side, you may find yourself a little bit late, or at least getting pushed a little bit. Not that you couldn't try and play a longer-term short position in Tesla, because I think eventually it will test this low, but I think maybe that doesn't happen until earnings come out. You know, maybe it just noodles around for the next month or so. So that's a possibility. And but here you're coming up into the neckline, up into the 20-day, but it could go a little further if the market drifts higher into year-end, and I'm sure, you know, that would confound a lot of would-be short sellers, and so I could see that happening. You know, you want to come after it here, and they'll turn it and squeeze you on it. Yesterday, it looked like it was going to run into some resistance right around here, around 214, but it pushed right through that and went higher. But you know, that's the way the short side works. You have to anticipate it, and then once the market's given you what it's going to give you, that's it. And if you're coming, you know, if you feel yourself wanting to get short when something's down here, then guess what? You are late. I also think you're kind of dumb, but you know, that's just my thinking. On Tuesday, someone in the chat room wanted to short this thing here on this day, and it was down here underneath the 50-day. But again, you know, it's the whole. Suddenly, there's an emotional impetus, a desire to get short. You know, so everybody starts looking at everything on the short side and wanting to short into weakness, which to me is not the right way to short. You want to short into weak rallies, like up in here along the 10-day, even along the 20-day up in here if you were going to short this thing. Once it's busting the 50-day and going through, that's not a short. But I thought that was a great example when that came up of how now the amateurs who have no clue how to short suddenly think they're going to find something to short. And I just think that, you know, that kind of signals the bottom, at least temporarily. And again, we have to consider that, as I pointed out in the chat room, I consider the sell-off to be mostly forced selling. And I think as the oil came down, let's go here to the USO, and a lot of oil stocks. What's the oil index, you guys? Somebody help me out. The OEX? No. Somebody shoot that at me. Dr. K, what is the oil group index?
Yeah, I just use USO.
OSX, thank you. OSX. You see the OSX been hammered. Okay, so a lot of hedge funds were long oils, and that's what caused the sell-off. And you had hints of it earlier because the whole group was forming a head and shoulders and rolling over as early as September. And I thought that was odd at the time because the group had actually led the market out of the April-May lows and breaking out to new highs. So it was a leading group, and then all of a sudden it sort of gave way. That seemed odd. Something was up there, and now you see it come to fruition when all these hedge funds and everybody else loaded up on oil. And I even heard that there were some, the brokers like to put out these products whenever there's some hot move. They put out these fixed income products that are called, they give them all kinds of funky names, but they're basically a short-term debt instrument with a kicker, as they call it, on that's based on some index. So if some index goes above some price level, you'll get an extra kicker. If it goes below, the thing blows up. So oil under $60 on a lot of these. There was all these oil indexed notes that people were putting out, Credit Suisse and so on. Probably the rest of the brokers who are mostly interested in selling their product and figuring out a way that they can get fools to buy into it. But these started to come apart, I think, when oil dropped below 60. And so basically you created a bit of a forced selling crisis situation, and then that plays out. And you see it happen. You see stocks get clobbered, and you get a sense, again, I can never emphasize more the role of common sense in investing. And common sense would tell you when something's had a move like that, it's pretty well oversold at that point, especially when you get two reversals. So you undercut this low here. This is a 213.60 low. So you undercut this low on this day, and you try to rally back, but I noticed it couldn't get back above the low here, which is about 217 and change. And so you come after it again on the short side. Then you get this dip, and it drops below this low here and this low here. Or actually, this is a low I'm looking at down here at 199.25. And it's had this kind of a move. That's pretty well played out. So you have to kind of look at things and get a sense of where you started and where you are. And you don't want to get too piggy. So anyways, at that point on Tuesday, looking at stocks like Baba on Tuesday had a pocket pivot. It was a little bit of a grinder. Was that Tuesday? When was that, Dutch Phase? Is that Monday or Tuesday? No, that's Tuesday, yeah. Right there, a little bit of it's off the 50-day roughly, but you can see the stock is coming up off the 10-week and actually dipping below it on an intra-week basis here on the weekly chart. But you get the pocket pivot there, so that's one of your stronger names. And as we pointed out in one of our pre-market pulse reports, I think on Wednesday morning probably, when there's a pocket pivot in a name like this, it doesn't necessarily mean that you jump in and start buying it. What it means is here's a pocket pivot occurring, which is an objective technical condition, and we're going to send out a report making sure you know about it because this means it's something to keep an eye on if the market turns. Well, the market turned on that day, and the next day you could have been buying into this thing right off the 10-day line, and it's moved higher. And I think this is a little bit too fast, so the kickback into the 20-day looks normal. So 107.62, anything pushing down there. So I thought this morning coming down to 108 and change was pretty much a gift if you're looking to buy Baba. But my guess is this stock is going to go higher. You're forming another flag here after this IPO U-turn breakout. You came right back to the top of this roughly, and the 10-week / 50-day moving average, and now you're coming off, and you're probably going to trade a little more volume this week depending on what we do today. But today I think there's 8.1 million shares coming loose on IPO lockup, but that doesn't seem to me to be a lot of stock. It probably runs into some short-term selling, and I think you take advantage of that to accumulate shares on the pullback. So that's one I like. I also think that cybersecurity with this thing at Sony and of course the other issues that have come up throughout the year with data being stolen, consumer data being stolen from certain companies and credit card companies and whatnot, and banks, cybersecurity is going to remain a very hot area, and I think next year look for this to be a hot area with some of the newer names. Palo Alto Networks is a newer name, but it's had a run already, but it's still acting okay, and I'm guessing it's going to push towards 130 going into year end. You also look at the other one I like is cyber, and on Tuesday this thing was pulling down, and these are things that I watch for. I'm looking for voodoo dry ups on pullbacks to moving averages on a day that the market is getting crushed. So they're slamming the market, but this thing's just kind of drifting into the 50-day moving average in the top of the prior base. And I think even if you had a viable gap up here, there's no reason why it can't set up again and go higher, and that's exactly what it's done. But you notice on a day like Tuesday, the market's getting hammered, and they're able to turn this thing and close it mid-range, turn it up off the 50-day on very light voodoo volume. So, and for those of you who don't know, Voodoo stands for volume dry up, VDU, but I decided to make it voodoo to make it more mysterious sounding, but it's really nothing special. It just looks, it's basically just a term for an extreme volume dry up. And sellers just basically disappear here. So I think stock moving up, you had not really a pocket pivot here, but I think the place to buy it was on the voodoo dry up to the moving average. And that's where most of these will set up. So anyways, somebody's Bill Gross of Janus, Dr. K. I think you said Bill Gross of PIMCO, but he.
No, that was the he used to work at PIMCO, running the world's largest bond fund. Now he has been plucked away from PIMCO. He's working at Janus. That's
right.
correct.
So somebody was pointing out. I don't know if I heard you say that or not, but not like it really matters. That's probably somebody who's got a little bit anal retentive. But in any case, Dr. K, NASDAQ up on lower volume. Are you concerned even though the MDM is on a buy signal?
The first part of what you said was blocked out. Say that again?
It says, Dr. K, NASDAQ up on lower volume. Are you concerned even though the MDM on a buy signal?
Oh yeah, I'm not concerned enough to the model's looking at buying and selling pressure, and and essentially you obviously want to see higher volume on days where the major indices are up. We're not getting that, but we also didn't get that on the last bounce. In fact, a lot of these bounces were done on lower volume, and that's because we're in a QE-friendly environment. Right now, there is no QE in the U.S. market. QE3 did end, but other central banks are very QE-friendly, and the perception is that, of course, the U.S., to keep interest rates low for a considerable period of time, will have to have other tools as it's ready to be able to keep these rates low. So the market is anticipating that we're going to be in a very interest rate friendly environment, and the markets consequently are rallying on that friendly news. Interestingly, when the markets have pulled down, they tend to pull down very aggressively, and then they tend to bounce equally aggressively and then continue to go higher. We've seen that action occur a number of times. If you look at, for instance, the S&P index, it will pull down, for instance, it pulled down 9.8% in October, and then it went straight back up. You can also go back to February of 2014, where it aggressively pulled down, correcting 6.1%, then equally as aggressively went straight back up. In fact, there's a question about the volatility that's being witnessed in the current market environment, and the question is, isn't that indicative of major market tops? And it's a good question. Right now, what we're seeing is, yeah, we are seeing volatility. The downside volatility over the last few weeks is very pronounced, but it was no more pronounced than what we saw in October or what we saw in February. And so you have to take everything in context. And yeah, we are getting a volatile environment. And okay, that was just guilt. Anyway, we are getting a volatile environment here, but it's not cause for, I can't say that it's an indication of a major market top. There's not enough evidence of that. The question also asked about 1929, when the Dow did reach a major high at 386 way back in September of 1929. And what ended up happening was, in context to the run all the way up through the high that the Dow set in September of 1929, it did have a very serious pullback. In fact, it corrected 17% from 386 all the way down to 320 in short order, and then had a very anemic bounce on light volume, just that lasted maybe 5 days, and then it rolled over, and then of course we had the massive correction of October 1929. Today's market is not exhibiting that kind of behavior. We've had this current correction went for about just over 5% on the S&P and the NASDAQ, and so in relative terms to where our averages have come from, this has been just a scratch on the surface. I would have probably been more concerned about the 9.8% correction we saw in the S&P in October. But then that was proven to be short-lived because, of course, we had a very aggressive bounce to the upside where the major averages, well, the S&P and the NASDAQ both hit new highs. So yeah, right now it looks like we're probably going to just continue this this bull market that is now in its, well, we started in 2009. So basically we're in the 6th year of this, we're going to complete the 6th year of this bull market come the end of this year.
Yeah, my answer to the question like that is, what does it really matter? You know, you're concerned about what the Nasdaq's going up on lighter volume. It came up off the bottom on very heavy volume, which is unusual because I don't think we've seen that happen. Usually the bottoms occur on lighter volume like here, but that's a pretty good kick here off the lows back in October when we bottomed. So I think it really comes down to what the stocks are doing. I think you just forget about worrying about and getting concerned over what the index is doing and trying to make some sort of macro call on that basis. I think you just watch the stock. So that, yeah, that said, you're up back at the high, so I wouldn't be surprised if you have a little backing and filling. But in the meantime, I think you'll see certain stocks continue to rise to the top. Getting back to my discussion, you know, cyber looks good, but I think you had to buy it down in here. And the other one to keep an eye on here that's sort of in an ugly duckling position is Vasco Data, which has been a strong stock. And it corrected with the market, which looks normal, pulled back to the 50-day. That's its first pullback to the 50-day after this gap up. So that held, and you got some support here off the 50-day, which was, I think, constructive. So I wouldn't be surprised to see this stock head back up to its highs going into year-end. So you're seeing BABA pulling back. I really wouldn't get too concerned about it. It needs to do a little backing and filling, maybe 1 day, 2 days, whatever. But I would watch, if it comes into the 20-day, that's definitely where I like it. But I take low 108s on this. But I think it's going to go higher if the market goes higher. So that's one place to be. If you haven't gotten into anything, I think the entry point is relatively low risk. Let's see. I'm just going to run through some stocks I'm looking at. You know, LinkedIn was a short sale target of mine, actually, and I hit it here on this. You notice you can draw a downtrend channel here. And I hit it at the peak here, and it got a little bit of love here on Tuesday, came down to the 50-day, but I noticed it was holding, and it didn't really want to give it up, and it's holding the 50-day, and you can feel it. A lot of times when I'm short something, I can feel the support in the stock. Because like Tesla yesterday, I was testing out a small short position in the stock, and you could just feel every time it started to drop a buck or two, you could feel the bid come in. So you just step aside, and in some cases you can turn around and go long, as would say LinkedIn, for example. But here you get a big gap. Is that a viable gap up, Dr. K, or is that not enough volume? It looks good to me.
Yeah, it looks good. Yeah, that's good enough.
Yeah, so you could have bought it yesterday. Stock's up to new highs, or higher highs, rather. Whoops, let's see. Where's my... This is what it looks like. This has got to be the biggest ugly pod with handle type thing I've ever seen. But it's going higher. But again, you could see it coming in. You know, my theory is I want to short this thing at the top of the trend channel into a rally. Not here while it's breaking down, which is what some of you think short selling is all about. But you've basically been brainwashed by IBD to believe that decisive move one way or another is something to buy into. And I think in this market you have to be a little more opportunistic and anticipatory rather than reactive and trying to get short everything after the market's already come down 5% in a few days. But so this, you know, if I feel something that I'm shorting is getting a bid, then I'll just turn around and go long the thing. And LinkedIn, you know, did exactly that, turned on Wednesday and then jacked higher yesterday, and now it's up here. Now you probably sell it and take some profits if you're trading it, but you know, that's a nice move, and it just shows how sometimes I'll come in and I might be initially right, as I like to say, getting some love on the short side. If I put it out up here into the, if you draw a trend line across there, it's almost perfect, not quite, but close enough for short selling. And the thing breaks down to the 50-day, but it doesn't break the 50-day, and there's no selling in the thing. I noticed, what was it, Wednesday morning, I believe. There's no selling in the thing at all. And you get that feeling. And, of course, at the same time, I'm also looking at the short side as probably being overplayed, but I can never be 100% sure. So as things bounce and rally, I'll test them on the short side just to get a visceral feel for what's going on. And if they keep pushing me, like with the Tesla, I may just say, okay, this thing's going to go higher, maybe to the 20-day up around 220. I'm just going to cover my short and go long a bunch of this. and then traded up to the resistance level. And so that's how I operate on the short side. And it requires being able to avoid getting sucked into a particularly rigid point of view one way or the other. So when you're short, I'm not always bearish. A lot of people like to ask me in the chat room, well, do you expect the NASDAQ to make news? Do you expect this? I don't expect anything. And as I've gotten better at trading, and I actually consider this year to be probably my best year ever because you have a crappy market, and I'm up over 110%, 120, somewhere in there for the year. What's been a very tough year. Dr. K, what are the indexes up for the year?
Oh, I think a little over 10% or something.
Yeah, so there you go.
Last I looked.
So my view is, given, in 1999, any moron could have made 200%. And, you can make 500, 1,000% if you're good. And that was easy. But in this day, 2014 is a very tough year. So in my view, to make over triple digits, I consider it my best year given the tide that I had to swim against. So as I've gotten better at trading, to validate that statement, I've learned to, instead of trying to think about things and getting concerned about things you see, just watch the stocks and they will tell you everything you need to know, and watch them without having any preconceived notion of what you expect them to do, and allow the things to tell you, what sort of theories you can develop in terms of how are the pullbacks progressing. Are they weak on days when the market's weak? Are they strong when the market's weak? What are they doing as the market's trying to bottom? Are they hanging in tight along a 20-day moving average? And can you notice sort of a lack of any conviction selling in a stock as it's pulling into a moving average? And the market will tell you what you need to know. All you have to do is allow your head to be clear enough to accept its message. And I know it's sort of a cosmic concept, but it is how it works. And it's what Jesse Livermore did, and I think it's what Bill O'Neill does. Even though he tries to fool everyone into thinking that there's some code you can follow called Can Slim, and you're going to be able to do what he does. A lot of it's experience and understanding what the market's telling you. So, that's the key. Rather than getting concerned over things and trying to add up different variables as being negative or positive, I think that just doesn't work anymore. So anyways, that's my rant. Let's go through some questions. ISIS, it's kind of a V-shaped buyable gap, and it's had several, so I don't know. If you want to buy it, go ahead. Use the low of the day as your low. But again, if someone's asking me, is this a buyable gap up, you can see it is. So my first question would be, why do you need to ask me? And then if you're asking me, should you buy it, and is it a, quote, good buy, which is a term I see a lot in emails and other places, I don't think anything is a good buy unless it goes higher after you buy it. So I can't tell you ahead of time, but, it's acting pretty well. A lot of these pharmaceuticals are going nuts. Blue.
Yeah, and it's ranked 3. It's very high ranked, so.
Look at this one, going nuts. A broker friend of mine called me to tell me that I guess a client of his had bought 5,000 shares a day before this gap up. And I thought, oh boy, he probably had inside information. Call the SEC. Anyways, let's see. Cephate is another one. That's a little more problematic. I mean, it's got the parameters for a buyable gap up. I think the trick was to buy it on the weakness. But this is a stock that, it has nice moves and then it gives it all up, and it has another nice move. So I think the key is figuring out where to buy it. Probably buying the pullback here was a place to buy it. Of course, how are you going to know that it was going to head higher? So, and a lot of biotechs had the same sort of V-shaped jacks to the upside. Look at Biogen just cruising higher. Celgene break and then go higher. I mean, the whole group's on fire. So, and there are names there. I think, is there anything in position to buy? You could look at Medivation. It's a little V-shape coming up off the 50-day after this breakout, so it pulls right back to the top. It's along the 20-day. And I know that looks risky to buy, but my view is if something can get back above the 20-day after a pullback to the 50-day, a lot of times it'll hold along there, and so you can try and buy little dips along the 20-day if you want to come into this. But not one of the hot names in the group. So today do we have triple witching options expiration today, Dr. K?
It doesn't seem, how are the volumes doing, actually? I haven't, even looked. Looks like volumes are not in, Not an indication. I don't know. I'd have to check. But it's not really something I really pay attention to.
No, me
In the
neither.
sense
A lot
that
of people do, though.
it's not going to tell me, anything. It's not going to help me make money. So,
No, it will account for some volatility, and you can expect it. And I think with the market up where it is, that you might go back and forth in here. But I would just watch the stocks. I wouldn't try and find things to excuse me, get concerned about. One thing I noticed is if we look at the Russell 2000 it broke out of this range, actually just cleared on a closing basis after this pullback, but it's acting pretty well, and to me that seems to be a positive for the market. So I don't really see anything to be concerned about. I think we had the sell-off. If you wanted to be concerned about the market, you should have been concerned about the market back up here when you started to see all the selling off the peak and the churning, and of course the typical manipulated low volume rally into the Thanksgiving holiday, and then it rolls over from there. Getting concerned now, probably a lot of these stocks down in their patterns probably need to bounce around, consolidate the prior downside for all these short sale targets we've been looking at, and then see if they head lower at some point, probably not till next year. But it seems to me that the line of least resistance right now is to the upside. So we'll see how that all plays out. Let's see, somebody wants to ask about Ziofarm. Well, it's just a cheap little biotech. If you want to buy it, go for it. But I don't really need to buy this kind of stuff to make money. Let's see. But I have no opinion on it, other than the fact that all the biotechs are hot, so they're probably better quality names to be looking at. Let's see. OIH is the market vectors. Oh yeah. See again, gap down. Look at that. That's just way down there. Maybe oil stocks are a value play here. Will we have counterparty risk on the structured notes? I don't know, but I think it creates a lot of needs to raise liquidity in some areas. Anyways, Dr. K, can you discuss blue in the context of a BGU? Are BGUs of this magnitude successful or prone to failure? Again, my quick answer to that is you're trying to slap a label on something as being as having some sort of certainty related to some sort of phenomenon based on a statistical tendency or something that you've created in your head. So I think it's all BS. You buy the BGU. If it works, it works. If it doesn't, it doesn't. Dr. K, your thoughts?
yeah, so it's exactly right. I mean, the BGU, of course, as we talk about, the price volume action leading up to it should be constructive. In this case, yes, it had a huge gap up percentage-wise. The price volume leading up to the gap up was constructive. You could take a chance at this. Also, realize though, if it does gap up as much as it did, you might be in for some considerable volatility, and so that might be outside your comfort zone, and you might want to maybe position size smaller on this kind of name. A stock that gaps up, say 80%, yeah, you're gonna see a lot of volatility in that kind of name. If the stock gaps up 10% or 12%, you're not going to see potentially nearly as much volatility. So of course you're going to position size accordingly. And when we're assessing these BGUs, we're taking all this into account. And so sometimes, we're going to look at this and say, you know what, this is probably outside the comfort zone of most investors, and so we might leave it alone. But it's, of course, in this case, it is working, and it doesn't seem to be doing anything wrong so far. And this despite a weak market, because if you look, it's had 2 weeks. It's been moving higher for 2 weeks. Whereas if you look at the relative to the general market averages, we've only had 3 up days after the market averages got hit pretty hard. So in context to that, it's showing some good strength. Some of you could use that in your favor and say, okay, well, this is actually bucking the trend of the market, so it's actually showing a lot of strength besides the viable gap up day. And you might, right now what you could do is you could wait for this pattern to settle out and then buy the pocket pivot. And of course we're monitoring the stock, so if it does do that, we will let members know, because that shows that it has enough strength in the pattern with risk that is manageable to many investors.
Today is quadruple witching, so I think the only thing I take away from that, Dr. K, is it can create some weird movement in the indexes. And so again, I don't watch the indexes, I watch the stocks, and they tell you everything you need to know. Really. No, it's true, really. There are no magic indicators or anything that you can use or things to be concerned about and whatnot. Let's see. Let's look at some more names. Let's just kind of ramble through some stuff. If we look at, say, more of the biotechs, you got Gilead. Now, this was a short sale target out along the 50-day. And notice, again, it got some love in here. Test this 100 level, which is support. And you could feel it there, not really wanting to come down. And it turns on Wednesday, and now you're popping out of here. And it's probably, if the group goes higher, guess what? It's probably going higher. If the market goes higher, it's probably going higher. So, and that, I don't see anything right now that seems to change that particular point of view. Alexion, probably an ugly duckling buy the other day. Yep, so, looking as ugly as it possibly could, and breaking down and finding support at the top of this big ladle with handle sort of thing, and bouncing right off the top of it. Boing. And you thought investing was hard. So I just think the key in this market is not to chase strength. And when things start to get real weak, you start looking for situations that are coming into potential support areas on light volume, and you maybe take some shots, But you can get a sense of when it's bottoming. And Tuesday, the market had that sense, even though the close was about as butt ugly as you could possibly want. And everybody's bearish, and IBD goes to market in correction. The market direction model never went to a sell. It stayed on neutral. So we can say that the MDM is a little bit smarter than IBD right now, that's for sure. Let's see. Let's look at, you guys have anything in specific that you want to watch? Facebook is cruising. You had a pocket pivot. But I thought, this thing came down here, not a lot of selling on Tuesday. It found support right here, and then it turned back above the 50-day the next day. I thought that could just be bought in there on Wednesday. And sure enough, it's going higher. Now you're sort of Ving back up to the highs and trying to re-break out. I wouldn't be buying it up here. You did have a pocket pivot yesterday. If you bought it this morning, you're looking good. And I probably wouldn't be looking at it up here. It seems a little bit extended. Maybe it needs to drift in just below 78 or close to that level would give you a shot at buying it. But again, this is a name that is going to be bought into year-end, I think, because it is a big stock institutional favorite among all the social networking names. And that includes LinkedIn is moving higher, too. And we're also seeing Twitter, which, when you think about this as well, this is weak. Okay, so this is still in a bear flag. And I think you need to watch this one on the short side because it has undercut this low. So usually when you undercut a low like that, you're going to get a better rally. And I'm just waiting to see if this happens. And I'm willing to be patient here and not try to force anything. I made a ton of money shorting this thing in the mid-40s right in here along the 20-day, and it came down a good 20% from there. So very very profitable on the short side, but I think it's done. VA, I was going to get to that one. I like the way this is acting. You notice how it's sitting along the 10-day, so you're set up for a pocket pivot potential, but I would watch here. If the volume's drying up, and I think today we are seeing you're running about 81% below average for this time of the day, although it's up on the day, so it's not really moving on any volume, but it is sort of drying up along the 10-day, and I think that's constructive, so you'd be watching for some kind of a move out of here. So that looks good. And I think the other airlines, the oil probably stays low, and that's probably constructive for the other airlines. You got Southwest, Delta, Save, the cheapy airline. It trades like a piece of garbage. But I think I would go for Virgin America, a higher quality airline. You like Virgin America, Dr. K?
Yeah, it's better than British Airways.
Okay. So yeah, you always take it when you fly into LA, right? Yeah.
I try to get Virgin. I prefer it. Yeah. I mean, there's some others, but it's a good one. Richard Branson does a good job running that airline.
All right, let's look at some of these other things. Look at Splunk. It's getting up to the 50 days. So this may be coming up into a shortable position coming into the 50-day, and it's about let's say if you use a top here, it's about a 50% retracement. Maybe it goes a little bit further, but I definitely would keep an eye on this thing as a short sale target. I think it's definitely still in play and could be making, this could be a left shoulder, a big head, and now you're forming a right shoulder in a secondary head and shoulders to what was originally a larger head and shoulders formation. And so you want to keep an eye on this one. You want to keep an eye on workday. It's up, just see how it goes just past the 200-day moving average, just to screw everybody up if you're trying to short it there. But this is also coming into position and probably needs to be watched. Data basically blew off any idea of it being a short. by having a pocket pivot coming up to the 10-day moving average, which looks pretty good, actually. And can't really complain about that. Then it gapped up yesterday and it's trying to go higher. This may be the one that bucks the trend, and it doesn't. It goes higher, and then maybe it sets up as a pod near the 100 level. But right now it's just acting like it wants to go higher. And if you were trying to short this thing around the line, that should have been your stop. And definitely once it gets well past the 10-day moving average on a pocket pivot, you definitely got to be out of there instead of trying to force the issue. But again, think about it. By the time, if you're trying to short this thing, earlier in the week, as the market's already come down a fair bit, you ask yourself, are you early or are you late? Is it really going to break down? I think if the market had broken down to lower lows, this probably would have broken down. But the fact that the market turned and it was something that was holding up better, say relative to Splunk or Workday, which, whoops, too many D's there, which have been getting crushed until they started to bounce over the last 3 days with the market. That was holding up much better. And so you also have to think about that too. I always ask myself, if I've got 5 stocks, I'm looking at the short side, is something holding up better than something else? And if so, does that mean it's a buy instead of a short? Such as the case with LinkedIn. Anyways, let's see. This is an interesting name. I don't know anything about it, but it keeps hitting my screens. New Link Genetics, very interesting. Little cup with handle. No real pocket pivots in here, but an interesting name, a little bit thin, $1.2 million, not too bad. That's actually okay. But I guess you had to buy it when it was looking ugly here at the 50-day, and now you're jamming up. But see if it flips around and gets tight along the 10-day moving average. I'd keep an eye on that. But that's an interesting pattern I noticed, and that's what it looks like on a weekly chart. So it's trying to come out here. Typical biotech recovery sort of name, or pattern rather. So again, we like the VA, sitting here along the 10-day, kind of looking for a pocket pivot of some sort. Netflix went through, this was a great short right along here, as Mark Cuban was saying that, it's a great company and you want to buy it and blah, 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 and he's adding to his position, which he probably bought right here on this day. But you have, you undercut the 331 low very, very decisively. And I understand that you'll see it just dip below it and you get a rally, that looks logical, and then it breaks to lower lows and you want to come after it and thinking it's going to just blow apart. But again, you got to consider you got about I don't know, what do you have up to? About 20%, maybe 15, 20, depending on where you come in here. And at that point, you have to think about how much more you're going to get out of this in the short term. It probably needs to noodle around. So if the market reverses and gets weak, then it probably just goes poof to the downside. But again, that's kind of played out short term. This AmTrust Financial, probably one of the best financials out there, is holding the 10 days, so you want to watch for a pocket pivot. You had one here, so that was a place to get in. It really hasn't given it up on the way up here. So I'm watching BABA still getting knocked around. Again, you have that 8.1 million share secondary, and my expectation is it's going to get knocked around. But again, bring it down into this area here, and I'm interested in picking up shares. You can see the MACD stretch on the downside followed by a MACD stretch on the upside, and now you're just kind of noodling around under 109. But remember, this thing was under 106 on Tuesday, so it's come up a little bit and it's entitled to a little pulling back. Let's see. Tesla coming in here. You can see on the 620, it broke early, and it hasn't rallied, so that may hold here. Watch this low as it comes in, but I'm not sure I'd be shorting it here. If you did get a short off up in here close to the 220, then I think you're in decent shape. And I should emphasize that you can be shorting into this rally in certain stocks, because I was shorting this market even as the indexes were making new highs 2.5, 3 weeks ago. And I think you just watch these stocks if they come up, and I think you can probably have some short positions. I don't think you're required to be all 100% long. You could test it out, and at least that way, if something does happen, some sort of exogenous event or something comes into play, then you can have something to sort of offset your longs, also known as hedging. Let's see. Any other incredibly brilliant questions here? I noticed Groupon had a pocket pivot yesterday. Right there. You like that, Dr. K? Is that an awesome pocket pivot? Does a pocket pivot for a stock under $10 have a greater or lesser chance of working? And would that be on Tuesdays or Thursdays?
These cheap stocks. Yeah, these cheap stocks, the odds are more against you. So, and this particular name, it's had so many gap downs in the pattern. It's very volatile. It's not doesn't have my interest.
No, I mean a lot of people like it as a I guess it's social networking, e-commerce type play, but it is looking better on the weekly, and it's trying to round out. I don't know, but I think you have to buy this. You had to buy it down here. If you're trying to buy this strength, probably not a good idea. Gee, I'm not seeing just a heavy flow of questions coming through today. Taser, I think you buy Taser on pullbacks. I'm kind of working my way back into it today. You had a nice gap up here. Dr. K, would you consider that a viable gap up? I actually would. But it is in a position where you've had several gap ups because you've got a lot of news that's come across the wires on various police departments. You know, LA PD announced on Wednesday or Tuesday night that they're going to buy, I don't know, 900 of these cameras of theirs or systems that they have. And so you get a gap up. I tend to buy it on weakness and sell into the moves up on news. And that's been a good strategy to trade the stock, which is actually pretty fun to trade. And now you're pulling in the volumes a little bit on the light side. I think you're running 32% below average for this time of the day. So pulling in normally, that looks good. I think this stock could be a thematic winner next year. I think you're going to see more of these cameras being put on, although, you know, what do they really do for anybody? So somebody calling me during trading hours, they should know that's not allowed. Let's see. You got anything you really like, Dr. K? Any exciting tube moguls
At the moment.
pushing to new highs? Look at that thing. Reverses on heavy volume. You got a pocket pivot right here. I think we put a report out on that thing, and it's going higher. So looking good, actually. Let's see here. Kind of going down my list. I notice ServiceNow, ugly duckling, violates the 50-day moving average and then turns right around and goes back up to the highs. How do you like that? That's such a classic move in this market. It's not even funny. Maybe it is funny. VIPS, VIP shops. Let me type that in correctly. Here we go. Not much going on there. You know, I don't know. I wouldn't. Not something I'd be looking to buy. I'd buy BABA. You know, why buy VIPs, which has already had a big run? I'd be buying BABA as a big stock. I think it's, if the market goes higher into year end, it's going to go with it. Any new merchandise ideas? Not particular. There's this new. Is it JC? No. What is it? It's a new IPO. They let people borrow money. Great business, I guess. It's a new IPO, but I don't really see anything new. I would consider things like CyberArk to be new merchandise. BABA is still new merchandise, relatively speaking. So, you know, it's only three months old, so, you know, but nothing new. Lending Club, there we go, LC, not JC. It's a new IPO, going nuts. I think when did they come public at? $15 coming in, so I don't know. Just let it settle down. Just like everybody wanted to buy eyes, you know. Now nobody emails me about it, but it was trying to hold up along here, but it hasn't. I think this thing is not a stock I want to mess with. It's gonna, you know, and it's probably like Rewalk, same thing, you know, just breaking down. Biotechs with very interesting technology, but nothing really happening on the earnings and sales front. But I think you watch these things because conceptually I think they're strong, but technically they suck, and there's nothing really there to bite on in terms of looking at them as being viable. Let's see. Let's take a look at the XLF is trying. Look at that. See, boom, breaks down right back to the highs. So, okay, you'll ask yourself, oh, well, this is just crazy and it's nutty. But again, think about it for just 1 second without thinking about it. And what do we see happen? You had the oil stocks getting smashed. We know hedgies are all long oils, and you got forced selling. And so a bout of forced selling hits the market, and then it just recovers. And that seems to be what the scenario was. And don't need to worry about anything or get concerned about anything. Just that's what happened. And so I don't really see that as an unusual move or something to be concerned about, or improper, whatever. It is what it is, because you get this bout of forced selling and they're basically out, and once they're done, that's it. And then the market turns and goes higher, and maybe that's what you saw back here as well, because the oils were starting to underperform back in September, as I showed you with the chart of the OSX, because they actually topped out in June, and then the OSX rolled over in September, and so that's when we saw the first correction in the market. Whoops, let me go back here, in September, October, and I think it might have been related to some forced selling as these things started to break down through a head and shoulders formation and make lower lows. And that seems to be what the whole gist of the market sell-off was in October, and then probably some follow-through as the oil thing just got worse. But you notice you make a higher low in the market, so probably positive for the market. Do you think small and micro-cap stocks will outperform? Why do I care? Who cares? I don't know. I think my stocks that I own, whether they're micros or macros or whatever, they're going to outperform. Otherwise, I wouldn't own them. But, it's, again, trying to predict the future. All you know right now is that it looks like the IWN is outperforming. So you don't have to predict whether it's going to outperform. You know already that it is outperforming. And I don't really need to know or try to predict what the market's going to do. I can see what it's doing. And what it looks like to me right now in real time is you're on the track to moving higher into year end. And if you try and sit here on the short side, you may end up with unrequited love. So anyways, we're getting close. It's 9:22 my time. What is it over there? 9:22, Dr. K? Also, are you 12 hours away, or what are you? No, you're 9 hours away, right? So
7:22 p.m.
Okay, so 10 hours. 10 hours. Okay. Anyways, I don't really have a lot to say. I think there's some pretty clear buying ideas. I think you can look at BOB or anything that's been a leader pulling back. Anything that's had strength over the last 3 days, watch how they pull back and look to enter on weakness, and then just get ready to ride everything into year end. So that's kind of what I'm looking at, and I want to be in the right groups and maybe even holding stuff through the new year, because maybe we just continue higher with the Fed basically saying that they're not committing to raising interest rates, but I don't think they can, and I think Bill Gross is right, like you were saying earlier, Dr. K, that you don't expect them to have to raise interest rates throughout 2015. And so, on that basis, I think that the market may be seeing, maybe it has some blow-off move, so it may just be seeing unending QE, because all the money's still in the system. So watch, gold is sort of pulling back in here. I think taking some pressure from the commodity group as a whole, but I would watch this thing as it tries to set up. It might be an indicator of sort of a blow-off move or an inflationary type move. So anyways, so market's doing its thing here, sloshing around after being up very sharply for a couple days. So even a little pullback here would be normal. So I wouldn't get all flipped out here. Anyways, any last questions? I don't really have anything else to add. Do you, Dr. K?
No, not really. It's just got to see if this rally carries on into year end. I think it probably will, because it's a seasonally quiet time for the markets. People are in good moods, and statistically, we tend to get more favorable days and lower volatility. But that's assuming that oil is going to stabilize in price. I mean, if it starts going lower, this downtrend in oil is very steep. And if this downtrend continues to the end of the year, I think that's going to be disruptive to the markets. We will see that in the action stocks and major averages. So, but again, we can't predict what's going to happen in the future. The future doesn't exist. We'll have to just wait and see.
Right.
And stay in the present.
Yeah. Anyways, so that's all we got, you guys. So we'll catch you next time. Thanks for showing up, as always, and have a great weekend.
So long, everyone.